Good morning, ladies and gentlemen. Happy hump day. It is Wednesday, January 29th, 8:32 a.m. Welcome to another video of Digital Goats Academy. I am your host. Now today, we normally just do live trading, guys, like just anything that I'm looking at anything that I'm peeking through the market. And you guys know that I've been consistently talking about S&P, NASDAQ, US 30. So I'm heavily trading indices, but as well, what I wanted to discuss real quick, since we're kind of waiting for the market to figure out what it wants to do, is pretty much the video that I did on YouTube. So I recently just dropped a video, I believe it was yesterday or the day before on YouTube, just giving you guys like a quick tutorial on chart marking. Now, it wasn't as detailed as I would like because I only have a limited amount of time for somebody to process the information, and it actually makes sense for them to be able to utilize. So I don't try to go too far, but again, too long. But again, if you guys are looking for more in-depth videos, please definitely comment on the channel so that way we can go ahead and take care of that. But anyway, it's hump day, like I said. So Wednesday are normally the better trading days. It pretty much gives you those trending moves that you would like. And when we look at GBP USD, first of all, man, like Forex pairs, guys, man, do they take forever and a day for them to unfold? But if you look at what I said on the video, which was dropped, like I said, yesterday, I talked about data points and I talked about what you should be looking at and the expectations if the market responds like this. So we did have an option that I said that if the market decides to continue pushing up, I'm thinking that these are the areas that the market is gonna reject from, but it actually respected my trending trend line versus the trend line versus the zones that I have, right? So I drew this trend line. It's imaginary, but these are still data points that the market touched. And you see this last point, the market is aggressively running away from that. So what I expect for this market to break this, because again, we did identify last week that GBP USD was overall bearish for the past, I think it was 13 weeks. Yeah, it was like the past 13 weeks, GBP USD has been bearish. So we have to expect that any type of push up is for the market to correct itself and then push its way down. So again, like when we went and scaled back on the higher time frame, we can see that there was a level of resistance created at the range high. And this was the area that we were looking at where the market shot up 1 week. And it's looking like it's actually going to take out all of this from the prior week. So this should be a field day for GBP USD. But our target is only like 50 pips. But again, like I said, I do expect this trade to go a little bit longer than what we're looking for. But our target is 23,354, I believe. And as you can see, if you would have entered here, which most people probably didn't, you'd have been up 112 pips. That would have been the perfect entry. But I know this is probably about the area where I told my community to get in. So anywhere from here, they're probably up 77 pips. That's a pretty decent day, especially with, the fact that it took like 3 days to unfold, but that's a pretty decent number, especially if you're especially if you're a scalper or intraday trader that's a little bit more patient. I tend to go on the aggressive side, guys. So that's what I like, sticking with trades that are a little bit more aggressive, such as indices. So we'll see if this market continues to push down and hit my target today, if not tomorrow. But again, that would have been like, just from the top, that would have been like 112 pips. That's pretty normal for GU. I normally know the move that it can move in a week anywhere from like 150 to 200, but you would need the whole week for that versus S&P where you wouldn't need the whole week for the market to actually correct itself. Now S&P actually shot down, which makes sense. It seems like it does this every morning. It shoots down and then it decides to push back up around 9 o'clock, 9:30. So we've been seeing that happen over and over. The market pushes down and the market shoots back up. But if anybody was confused to say, well, why did S&P even push back down there? These are things that you got to start identifying, which is imbalance candles in the market. Now, I know this information is already here, so it's hard to kind of say like, hey, nothing exists. Well, I mean, you could see that nothing existed to the right of this candle right here. So if I box this candle and brought it all the way out here, let's change that color. And I'm specific about my colors. What am I looking for? They really don't give you any like wide variety of color options. Let's do this blue right here, or turquoise, whatever color that is. Well, I guess it really doesn't matter for the inside color. Doing too much, right? Doing too much. But what we want to do is highlight basically this candle, and that's why I stretched it all the way over here. And the reason why I did that is because if we take the fib, we got to bust out the fib, because this gives us an idea at what percentage this market, shot down to or pulled back to. Remember, ideally, we want 50%, but closer to 50% still counts as 50% versus me, thinking that, oh man, the market is that the market is going to break this. So we still want close of candles and more direction. But again, anywhere from 50 to 38%, we can believe that the market is actually retesting an imbalanced candle and pushing up. It could go 100% of this market. Absolutely. Nothing is stopping that. But that's why we'll pretty much back out. I scaled in, and what I want to do is back out to see if this imagery makes sense to me. And at that point, we still have to wait for the market to show its hand. But okay, when I backed out to the 3-hour, you see the candle changes. Yeah, let me get that box out the way. Now I can kind of orientate it to this candle, because this is the highest. I mean, this is the candle that's presented on a higher time frame. So now I want to pretty much annotate or look at what area that the market retested based off of Fibonacci. And you see it did come back 50%. Not to mention, this is a doji. Definitely when it comes to indices, they love coming back to these areas and retesting. And again, if we turn it to a line chart, all this stuff just makes sense, man. Like, previous high over here that the market wants to come back to. It actually shot down here, but it might close at 382, giving it structure, meaning that the momentum is definitely going to be high to the upside, and probably by like 9:30. If the market doesn't continue to try to plunge down, the market should decide to shoot up. But it could, like I said, 9:30 could shoot this thing all the way down. That would be a previous high that we had. But again, I look at, besides when the market switch over to a new session, S&P normally gives like shallow retraces, and it's based off the higher time frame, and it's based off of imbalanced candles. But as you can see, this candle got tested, so there was really a lot of liquidity left in this candle right here, even though there's not really a strong body. The liquidity is in these wicks. So the market actually came down to, and if you look, it came down to 50%. Oh, I thought it might have came down to 618, but no, it didn't come down to 618. So if it closes which we have 2 hours left for this candle, it can either close or we don't want it. I mean, this is S&P. I doubt it's going to take, all day to close and still be right here. What we want to see this candle do, we want to see it turn bullish. We want to see it turn either green or blue, whatever you got your color coordinated for buys, and then go from there. But we want it to stay green from this position. But yeah, the fact that I'm seeing it reject at the body of this candle, not to mention, like, one thing that I've always perceived is that if the market comes down and it's going to retest, it's better to expect it to come to like a complete body of the candle, unless it's already been previously retested. So like I said, right here, this candle has been retested. It left a wick behind, but it still got retested. The body got closed at the top of this candle, but it's still at least, retested on a smaller time frame or grab liquidity on a smaller time frame. So we expect the same. We should expect the same from each candle. And that gives you the better depiction on what the market is actually trying to do, is what I'm saying. So close of candles and waiting for close of candles for retest give you your better option. The one puts you in the least jeopardy of a drawdown, but also almost gives you that sniper-like entry. Nothing is guaranteed like for like a sniper entry, but it puts you better, one, for your margin, like I said, and just overall entry. So yeah, S&P is like, it's not really doing much. Let's look what it's. And remember what I said? That wasn't yesterday. Was that yesterday? Well, for my group, for my community, remember what I said yesterday about paying attention to the change over here. So if you look, US 30 is down $65, negative $65 from the area that it came from, and S&P is down negative $9. The NASDAQ is up $16. So you see how, US 30, S&P are doing the same thing, but the NASDAQ, because it's in a tech sector. But understand this, they all should by the end of this day, they all should be doing the same thing. You know what I'm saying? So if I'm looking at NASDAQ being the oddball out there, one, we've already expected S&P to be bullish. We've already expected US 30 to be bullish or to be in an uptrend, to continue buying up, if you're confused about that. So our expectations is that once the market settles and the NASDAQ is already showing its hand, doing the same thing, but it's still positive, we should expect the same thing from S&P and US 30. Now, I don't want everybody to like hear that information and put it in your head, because it's kind of like a vague statement, to be honest. It's more so of comparison. You're comparing what the other markets are doing, knowing like what the trend is, and now you're trying to see like, okay, based off of the market time and where it's current and where this market cycle is at, is this thing ready to buy, or is it going to keep pushing down, and so forth. So you see the NASDAQ is losing, it's losing equity. It's continuing to push down. But again, like I said, we've already looked at it to be overall bullish. This thing is still positive. And that's the one thing that I like to see, that, okay, it's still positive. Come 9 o'clock, we should see US 30, the NASDAQ start to want to make its turnaround. So even here, like you see, it broke out of a previous doji. It's back to return there. So that definitely makes sense. And again, keep scaling out. Just keep scaling out to see what the imagery of the market is showing you. Now with S&P, like, it doesn't always like or like how other Forex pairs you would expect, once it breaks that area, it pushes all the way back into it. Indices don't necessarily do that. They more so track momentum. So anywhere where they left in balance at, that's where the market is normally trying to head to. So we're on the 4-hour now. Let me close that out. And this is just gathering more information. This is gathering intel to kind of see what the market is trying to do. All right, we're at 238. which is a shallow move in the market. If it were to retest that, all right. So on the 4 hour, we haven't hit the two three. Well, I got 236, the 238. But on the 8 hour, we've crossed over the 238, and we're trying to push down to the 382. But like I said, remember what I've always said is that ballpark area. It doesn't have to necessarily touch the Fibonacci because again, that stuff is still technically like imaginary. You know what I mean? It's just giving you confirmation once it gets there. But to me, close is as good as enough. Close is as good as enough as possible. Again, I do want to see it. See if it touches into the zone, but that would confirm my expectations on if this market is still bullish, if it touched this and then pushed away from here. Anywhere in this area, it's still pushing down or it pushes up from this area on the next candle. Yeah, I'm liking to see that. If anything, because we have 11 minutes to this 8 hour candle. Yeah, the next candle I would like to see probably push down a little bit and then push up from there. But that'll be a whole new 8 hour candle because we only have 11 minutes left on it. Unless this whole candle turned green from here, which I would love to see that. Yeah, I think we could see that within the 11 minutes, if not close, and then push a bull candle on the opposite side once it's done, like dancing around here. So the technicals are there. It's just all about how deep the market wants to push back down to. So that's what we're going to do. We're just going to kind of analyze and wait for the market to show its hand and then just kind of go from there. So everybody just relax, set your parameters on whatever trades that you're personally looking at. Look at this. You see the change? Up $23 now, only down -$8. And I think, where were we at? We were at negative like 11 or something like that, or -9. So you're seeing the change happen. You're seeing the market sway towards more of a positive move besides US 30. But US 30 is way more aggressive than these other two. One thing I said is that as long as it stays like US 30 can go -100 or +100, but as long as it doesn't stay there, you know what I'm saying? And that'll kind of be your indicator on like what the market is trying to do based off of the time frame. So this thing stays like negative, like US 30 stays negative after 9:30. We could have a couple of retest zones, but more than likely it's going to stay like that until it wants to pull back around like 11:30, 12. That'll probably be its pullback zone from the 10:30 move, if you're following me. So yeah, I'm gonna look at Bloomberg real quick while we're waiting for the market to show its hand. But again, pushing down here, that's definitely the better bet than waiting for this market to push up from up here. Okay, it's 9 a.m. Let's see what's going on. So if you guys look, the change has happened. I mean, on the change for indices, you can see that the NASDAQ is up $54 now. US 30 is down negative $38, which means it's going positive. Same thing with S&P, down negative $4. So these things are shifting positively, like we wanted to see going on 9 o'clock. We do need 9:30 to still present itself, but I mean, to me, anywhere in this area, that wick would have been a good area to catch it. And then again, if you break it down to the 45-minute, you can kind of see it's producing candles. Definitely going to blow past this just because we already have a gap up here anyway. So the market is definitely going to blow past that gap, which is my purple. And I mean, yeah, there's not really much to go off of. I do know that Jerome Powell, Federal Reserve President Jerome Powell, who is speaking today. So unless that adds more equity on the positive side to the market, it could throw some inconsistency. So at that point, you should start seeing some manipulation being produced in the market, pretty much making it unclear like what the direction is. But again, we already know the trend, guys. So we just have to, make sure the market actually breaks these areas, which I know it broke this previous low. But again, this is why we looked at where the market came from, which was that previous imbalance candle right there. So I mean, clear as day. I can't stay till 9:30 to celebrate with you guys. I actually have to go. But if you found value in this video, definitely hit that like button. Make sure you guys comment on anything that you were either confused about, anything that you thought I didn't cover, or anything that you guys want to see. Always hit that subscribe button. I appreciate it. Y'all are doing me a favor. This definitely helps me grow the channel and helps me being able to expand on what I want to do for you guys in the near future. So appreciate you guys. This is Digital Goats again. Antoine Farrell signing out. I will see you guys tomorrow. Let's talk some more about what transpired today. And then, I'll do my weekly review on Friday. And then we'll go from there just to see how the market played out. And that should give us pretty much what we're looking for the rest of this year. I'm not saying that just buy, but that should give us the consistency on what the direction is. And it's just up to us to jump in at the right price to buy or sell. So see you guys tomorrow, yo. Enjoy your trading day. Try not to over leverage. And definitely take the money, right? Take the money. It is still January.